For the uninitiated, what we have is a project called Ewoyaa in Ghana. It is a project that we're now taking to production. So some of you who may have been following the story, we got our mining license at the end of October. So that's our green light to take the project forward, and we're aiming for first production in 18 months. So not very long at all. So we've got a lot of work streams going on at the moment to deliver that on time, on budget. Before I begin, I would say some of you will know we received 2 offers for the company, one in October, one in November, at a substantial premium to the then share price, both of which have been rejected. And obviously, I'm going to be here this evening explaining to you why we reject those offers, which ultimately is there's a lot more value here to be had. Speed reading, thank you very much. Okay, so in terms of where we are and what we've been doing, we're based in Ghana, and obviously Africa is a very diverse continent. There is no country of Africa. Some places in the world, they think it's all the same. It's absolutely not. Some of the best jurisdictions in country are Morocco, Botswana, and Ghana. And so we're in Ghana. So this is a long-established mining jurisdiction, over 100 years. So as it stands today, there are 20 operating large-scale projects in country, mining. 16 of them are gold, but they also have bauxite and manganese. So other minerals are available in country. And the government is very pleased to receive this as a lithium project. It will be a diversification of what they've got in terms of mineral base. So the benefits from that, from our side, are not only in terms of the infrastructure they have in place in country, but also the people. And people are very important to delivering this project on time. So in terms of the mineral resource, for those of you who know the project, we were at 20 million tons at the beginning of last year with a scoping study. We upgraded that to 30 million tons during the course of the year. We did a pre-feasibility study based on that. And then we moved up to 35 million tons at the beginning of this year and moved up to 4/5 of it in the measured and indicated category, which is reserves. And the importance of that is we can bring it into a mine plan, which is what we did in the month of June. So we completed a definitive feasibility study. So that's very important in terms of being able now to actually take the project forward, because that's the basis, the plan for taking it to mining. In terms of the project economics, we'll come back to this in a minute. What really works in favor of this project is very simple mining conditions. And I always say I've worked in the mining industry for 25 years. It's not the biggest project I've worked on, but it's certainly the simplest project. So the nature of the deposit, the nature of the mineral, easy mining conditions, easy processing. So what we talk about here is DMS processing, which is basically a gravity circuit. We don't do flotation. A lot of lithium projects require that. That's additional CapEx and additional OpEx, something we don't have to do today. In terms of the additional upside, we'll come back to that again in a minute. We have a very large license area, and we've only begun to scratch one corner of it. We think this project will go on for decades, and we'll show you in a minute about that. The strong project credentials that it meant there. This is one of the benefits of working in Ghana, obviously a very developed jurisdiction. We're also very fortunate as to its location. So it sits on the coast in an area called the Cape Coast between the capital city, which is Accra, and indeed a major port which we'll be delivering our product to. Fortunately for us, our plant will only be 800 meters from an existing paved road, which we can take the product along. And indeed, the port facility that Takoradi has recently upgraded, that's for minerals handling. So there's plenty of capacity at that port which we can deliver to. And we'll talk about this. It's a very important project for Ghana. One of the things as we work through the project from the very beginning is work very closely with our community. Now we are also working with the region, and most importantly, recently working with the government. So everybody is invested in the project. Everybody has an interest in the project. So this will make this project work. So on track to deliver. One of the things that we have been working on is actually making sure we have the right people. We brought in an experienced spodumene miner to take the project forward, which is very important to us. We have the mining lease granted. I can't stress the importance of that. That's a key for us in terms of the permitting. There are remaining steps to be done, but that's the biggest permitting hurdle that we have to do. And then finally, over there, we talk about the funding opportunity. So we already have a significant partner who's providing most of the funding to take the project to production, but we also have 50% of our offtake remained unsecured. So in that case, what we can actually do is additional funding through that offtake product that converters in China and elsewhere need. So just looking at the share register as it stands today, we have some very important shareholders. First and foremost is Assur International Holdings. So they've been with us from the beginning. They are a large South African mining house. They produce iron ore, manganese, and chrome. They are very interested in the project because it meets their criteria in that it's a low-cost operation, and this is the sort of project that will survive in any pricing condition for lithium. These are the group that actually made the offer for the company. So they made an offer in October at 33 pence, and they reiterated the offer in November, and on both occasions we rejected it because we see a lot more value in the project. We currently trade at about 26 pence, so we're a significant discount to that. We also have Piedmont Lithium there. They have a 9% holding at the topco level, but they're also earning into the project by funding most of the project economics. And then finally, the board of management, so myself and indeed Amanda Haas is here this evening, and one of our other directors have invested a significant amount of monies into this project this year. So over $3 million of Australian dollars of investment from our part, showing that we believe in the project to take it forward as well. Where does the project sit in terms of spodumene mining? So hard rock mining projects around the world. There's some very big ones in Australia, and there are several significant ones in the continent of Africa today. But we will be, when we take this to production in 2026, for the full production scenario, will be one of the 10 biggest spodumene mines in the world. So not something to be sniffed at. We think there's more potential in the project in terms of extending its life and maybe possibly eventually increasing the production as well. But in itself, the initial plan for production is very significant. So here's me in my Sunday best. That's the Minister of Mines, together with the Minerals Commissioner and indeed the Sovereign Wealth Fund, who are now investors into the project. What we agreed with the government was a number of things above and beyond what you would normally expect for a mining lease. So we agreed for them to have increased royalties on the project, an increased government share in the project, neither of which ultimately affect significantly the economics of the project. We agreed to do a study on feldspar. So feldspar is actually useful for us as much as it is for the government. The government's very interested in us developing the feldspar, which is our principal byproduct, because there's a ceramics industry in country which needs that feldspar to develop further. We need it because obviously it provides an additional revenue stream for us, which helps us with our costs. We're looking at downstream conversion. So this is a chemical plant in country. We think it's a little bit ambitious at the moment, where if we can make money doing it, we certainly will. But we're doing that study at the moment, and we'll complete that at the beginning of next year. And to provide the opportunity for Ghanaians to invest directly into the company, we're also doing a listing on the Ghana Stock Exchange, which we'll complete by the beginning of next year as well. And finally, and not least, there's a community development fund. So this is 1% of revenue from the project. This is very significant revenue, which will go into a local community project, so a significant beneficiary of the mine. In terms of the economics, very good. So as we pointed out, 365,000 tons of product per year. That's a very significant contribution to world production. Very robust numbers, and these were done on very low, well, not very low, but low costs, low pricing for lithium. So a lot of people are worried about the lithium price falling at the moment, but the numbers that we use to calculate this are below those current lithium prices, which makes it for very robust. And you can see, using those numbers, we're still a very profitable business. But the number I really like here is is that one there. And this is what really makes the project work. So that is our all-in sustaining cash cost at $675. That makes us very competitive with some of the best projects in the world. So even if the lithium price was to fall significantly more, we would be one of the last projects in the world to close. Capital cost also, and if you look at the mining industry, $185 million might sound like a lot of money, but in mining terms, it really isn't very much at all, and this is because it's a simple processing option and because we have such good infrastructure in Ghana today. So let's talk about the sovereign wealth funds. This was very important in terms of our discussions with government. Beyond the government getting a free carried stake, which it does in Ghana, we also have a direct investment effectively by the government through its sovereign wealth fund. So they're actually investing at the project level on a commercial basis and into Atlantic Lithium at the topco level. So very significant money. So this is obviously provides us further financing to the project, but also is buy-in from Ghana into the project, so we're all working together for the common cause. Talking about where we are with the offtake, so we actually produce two products. One is SC6, which is a higher grade, which we're going to see selling to Piedmont Lithium. Piedmont Lithium is the partner I mentioned before. They're building a chemical conversion plant in Tennessee. And so that ultimately will end up in Tesla and LG Chem products. But we also have 50% remaining, which we intend to provide to the market. And we're looking to find an off-taker at the moment for that, and that is a means of providing additional financing to the project. So this is where we are on financing. So here on the, whoops, go back one. On the left side, you can see all the components to taking the project to production. And this provides $185 million of total capex that we have to spend. In terms of how we finance that, so Piedmont, our American partner, is providing $70 million of the first of the capex. Thereafter, we have funding from the Sovereign Wealth Fund. And then the remains is shared by Piedmont and ourselves. So $38 million there is coming from Piedmont, and the last $38 million is from us. And so our plan for financing that is to go to off-takers. So we've seen a number of deals recently, and the form of those off-taker agreements is prepayments for products. So ultimately, the off-taker is looking to secure a product in the future for their chemical plant. We will provide that product on the basis that they provide us with additional financing available to us. And so the order of magnitude of that is anything from 70 to 100 million, so we actually could have a buffer. We won't necessarily draw down all of that money in one go. It will be there to ensure that we have a buffer so we can take the project to production on a timely basis. So here we are on the timeline. Very significantly down the bottom here, you can see the process that we're going through to permitting the project. So we have the mineral lease, the main mineral lease grant, which is the first important step which we completed recently. We also have an EPA approval, which we'll complete by the month of September. We're looking for parliamentary ratification for the project, so the Parliament needs to ratify it. Never had a problem ratifying one of these MLs in country, so don't expect to have a problem this time either. And so we're looking in September to have everything wrapped up into a mining operating permit, and we can break ground on the project. So a very short timeline for this. What we're actually doing in terms of the plan is two stages. So the first stage is we're looking at having an early production. So this is using early modular units to make production. So this will occur by the second quarter of 2025. So that's only 18 months from now. And then we ramp up to the full plant operating 2026, which provides us the full production scenario of 365,000 tons per annum. In terms of the main stages, so we put out an announcement yesterday that took through all the work streams that we're conducting and indeed all the people we're employing in the company to take it forward. One of the important steps is we're moving a transition line. We have power available to us on site, but we're very fortunate actually that it runs straight over the site. It's a little bit too convenient, so we need to move that transition line to one side. So we recently got the permissions to do that, and we'll be doing that in the course of this year. And then we start beginning with the earthworks, as I said earlier, for the last quarter of the year. So all of these stages come together, and as I say, by the first half of 2025, we start commissioning of the modular units and then onto the main plant in the following year. So we have 35 million tons, but what we also have is a great deal of potential in terms of upside in the project yet to come. We continually work on this. So in this area here is with the very small area we've identified. It's the initial discovery and where we've been working. So we've actually not worked more than 5 kilometers from where we originally made the discovery. So all of this area is potential further growth for us. We also have areas over here to the east. So this is an area of known mineralization. And just here, there's a known spodumene occurrence, which sits in a forest reserve today. So we can't have access to part of that as it stands today. We've actually just been issued a license nearby, which has known spodumene mineralization. That's a very important license for us because we know that we can add additional resource there as well. So lots of potential in this. We're looking to do a resource upgrade around the middle of next year. So again, you'll see a resource increase. And over the years, we'll continually do more work to increase that resource with the intention of always being able to extend the mine life. So it's not just a 12-year mine life, which is what we're initially looking at, but often with so many mines, you're adding further years. So hopefully it will run for 20 or 30 years in the end. So we recently increased our drill program another 8,000 meters for next year. And so this adds into that resource work we're doing and indeed the exploration work that we're doing. We've done extensive work in the immediate area, and we're going to apply those same techniques over the rest of the area. We also do have some license applications in Côte d'Ivoire. We consider those a lower priority at this point in time. We're focusing on our main project in Ghana, which is key to us to take the project forward. So just to recap then, we received the mining lease at the end of October. The next major stage is the EPA permitting. We're very confident that we can do that. The government's very supportive now for the project and helping us get through all the permitting hurdles that remain. We are at a state of operational readiness as the announcement that we put out yesterday. We're talking about all the work streams we're doing, the awarding of the key contracts to make sure that we can deliver this on time, on budget for 2025. And very importantly, people both in country in Ghana, as indeed we have a team in Perth in Australia. So that's important to us as well because that team there is based where all this spodumene mining expertise exists. We brought in a chap called Keith Muller who ran the Mount Catlin lithium mine in Australia. So he has that expertise himself, and he's been bringing forward a team which will advise and effectively run the project with an in-country team of Ghanaians in Ghana. There's additional value that we can add, so flotation, feldspar, and downstream conversion, as I mentioned earlier. All of these things are potential additional value adds to the project, things that will actually enhance the value over time, and those studies are ongoing now. And obviously, we've started with the project build there by moving the transmission line this coming year, and indeed with the intention to break ground in September. And finally, with the issue of the mining license, the government has given us a preferential treatment in terms of actually getting new exploration licenses issued. We had a number of applications pending. We had 2 issued last week, and we expect to receive more. So overall, the project has, I think, very strong credentials. We're getting to production on a near-term scenario now, and we will be a very profitable operation once we're up and running.
Well done.
Thank you.
So before I open it to our audience tonight, the Ghana Stock Exchange, give me a bit of colour. How does it compare to the AIM market?
The Ghana Stock Exchange is relatively small compared to the AIM market. There are a limited number of companies listed there today. But one of the things the Ghana government really wants to see is more companies come available, and indeed the opportunity for Ghanaians to invest in their own projects. And so they've actually been very helpful in expediting the process, and actually our finance director is at the back there somewhere. And she can tell you they've been very helpful, so we expect to complete that listing by early next year. And I think as we move to production, there are certainly pension funds in country who can actually invest directly into it. Obviously, we already have what is probably the most prominent investor on board, which is the Sovereign Wealth Fund. So they're obviously investing already in Atlantic Lithium, and they'll hold their shares in Ghana. So I think that's a good lead for the market, and over time, I hope that it will develop and that more people will invest in Ghana.
Very good. Very good. I think if it doesn't work out, you could be a great diplomat or ambassador for Ghana, definitely.
I'll do my best.
Any questions for Neil from the audience? This is a golden opportunity to get the question in whilst he's here. Whilst you think about it, I think that there's lots of tendering processes going on at the moment. So are you able to tell us what the quality of proposals is like without naming names? But are you pleased with the quality of proposals for the tenders that's going on at the moment?
Obviously, as much as possible, we're doing Ghana. And one of the fortunate things is it's such a developed mining industry, we don't have to look far for some of the things. So the biggest contractor that we will have is the mining contractor. And so this is something like 60% of the costs of running the mine. Fortunately, there are 3 very big mining contractors in country, and we're evaluating those. So we look to award that one, importantly, next year. Most of the equipment's coming from outside of Ghana because they don't produce it in country. Most of it is coming from South Africa, so the modular DMS units and much of the other equipment will be coming from South Africa as well. But to be honest, it's very good quality. And our timing's quite good because the reality is very few, although there are a lot of lithium companies out there, actually very few are on a timeline to be in production in the next couple of years. So actually, there is good availability. We don't expect to have any problems on that side in terms of delivering on time.
I'm wondering whether you've done such a good job that no one's got any questions. Right.
Just a word or two about the terms of the offtake agreements. We see lots of companies in your position do offtake agreements, and usually they're not actually good for the long term.
Oh, I'd take that. I mean, we have an existing agreement, so that existing agreement with Piedmont is one we did several years ago, and at the time I think they were good terms. And that's over life of mine of the project. So the project, they'll have that 50% right, but they buy that product at market price, so ultimately it doesn't have any impact. It's then they don't get any discount, they don't get any special treatment beyond the fact they have the right to buy it.
Is that spot price, you mean?
Yes. So Asian markets.
Is that effective? Because in lots of markets, spot isn't actually the price that people usually pay.
It's true. So when we did this, there are sort of 3 benchmarks that you can refer to for spot pricing. It does have an element of the long-term pricing as well, so it's a calculation. Since we did this, and obviously lithium's a relatively immature business, so when we did this, this was the point of reference that people used. Now they have rather more sophisticated means of determining what that price will be. So when we come to the next round of offtake, and this will be different, we're not looking at life of mine, we're looking at ultimately fixing a quantity. So with that quantity, we will have the availability of cash, and again, it will be priced based on a marketing formula. So there's now some quite sophisticated marketing formula that are being used in recent contracts. So yeah, I mean, no pricing mechanism is perfect, but at the end of the day, we're going to do it with reference to market prices.
Yeah, thanks, Neil. In terms of the shareholder register that you put up before, you've got Assor and Piedmont. There's no real major Western institutional investors on there. You're obviously doing road shows. What is the feedback you're getting in terms of the risk hurdles they need to see? And you've done quite a lot of work over the last period overcoming those. But what is the key risk hurdle that we can expect to start to see those major institutionals come on board?
It's a very good observation. So the reality is, as you appreciate, really the lithium business is a very recent business. So 10 years ago, it didn't really exist. So what you're seeing, even in large producing lithium companies in Australia, the institutional portion isn't actually that big. It's mainly held by retail high net worth. It is beginning to change because obviously the size of the industry is getting bigger and the institutions are looking at it more. I mean, from our side, obviously institutions don't like to be visible. So I will say we have three institutional investors, all well-known parties. I can't name them because obviously they would be upset, but at least one of them is a household name in this country, and 2 others are proper mining-focused funds. So and they sort of at the 2 and 2.5% level, and they're very supportive. Do I see more coming on board? I guess there's 2 things. One is people get more comfortable with the lithium industry. There's more institutional investors. We currently been roadshowing. I think a number of people have been very impressed, not only with the economics, but the stage of de-risking. So as we go into next year, there's more de-risking. And as we get to the stage where we're actually breaking ground next year, it's pretty much fully de-risked in respect of the production. So yes, do I expect to see more institutional investors? Yes. That's not necessarily the fastest of processes, but it goes on.
So finally, Neil, did you say that you haven't ventured further than 5 kilometres away from the original discovery?
Yeah, that's correct as it stands today. Okay.
Is that because you're not looking further afield, or there's some sort of rabbit-proof fence that's sort of hemming you in?
No, the reality is that the most effective thing to do once you've got an initial good discovery is actually focus on what the area you're going to be mining on. So you build that mine plan around that area, and then you push out beyond it. So we're actually pushing out beyond that now. We're doing more work on these areas. With the grant of additional licenses as well, we have actually a really big area in Ghana to work on. But we don't actually restrict ourselves to that because we've got a very good discovery team. So obviously they discovered Ewoyaa and got it to this point pretty quickly. I mean, they talk about statistics of 15 years to bring a new mine to production. Well, if you think about it, this was identified in 2016. In 2018, we started work. If we get to production in 2025 and full production in 26, we'll be doing very well against those statistics. I think all credit as well to Ghana as well as pushing forward through those permitting hurdles to make sure we meet them on time. But we're not content just looking at the area we're working in. We look at other projects in Ghana that may be of interest. And we even look out in West Africa and beyond to see if there's an area there which might be the next Ewoyaa. So is there another project out there which might be mine number 2?
Lovely. Thank you very much. Thank you.